Swing Edge Pro, the intelligence feed for decisive traders.
Welcome to the briefing. Our target for this session is Apple, ticker AAPL. The mission here is pretty straightforward. We need to identify the strategic edge and figure out if a high-probability swing trade is actually taking shape. Okay, let's dive in.
You know, the chatter online is really starting to build up around this one, but the data? It's sending some seriously mixed signals. So our main objective is to cut through the noise and determine if this is a genuine buy signal or if it's a bull trap just waiting to catch people off guard.
Here's how we're going to break it down. We're going to move through 4 phases. First, we'll combine target ID and edge detection. Then, we'll get into the execution, the actual tactical zones. And finally, we'll wrap up with our session close, the final verdict and risk assessment. All right, let's get right into our first 2 phases, identifying the target and detecting the edge. We're going to run Apple through our strict swing criteria to see if a real actionable edge even exists in this market.
And here is the complete assessment. The results are, well, they're mixed to say the least. Look at this. Only 3 of our 9 critical criteria are actually met. Now, that tells us right off the bat that any potential trade here is going to be highly conditional. It's going to require some serious precision. So let's break down the most important points.
So right here we see a huge disconnect between the market hype and the cold hard reality. You hear that chatter claiming the stock is bouncing off its lows. But the data shows it's trading over 51% above its 52-week low. So the key takeaway is simple. This is not some deep value play near its annual floor, not even close.
But, and this is a big but, this brings us to the one major bullish indicator we have on our radar, the formation of a triple bottom. For those of you who track patterns, you know this is a classic reversal signal. It suggests that the sellers are getting exhausted and the buyers are starting to build a new floor. Honestly, this pattern, and this pattern alone, is the entire core of the potential strategic edge we're looking at.
Now, this brings us to another key criterion that is met, and it's a big one: institutional ownership. It's sitting at a massive 64.83%. You've got giants like Vanguard and BlackRock holding huge positions. Why does this matter? Because this big money presence gives us a good indication of a structural floor under the price. These guys are not easily shaken out of a position.
On the other hand, we have to look at the fundamentals. And this is a major red flag. Year-over-year revenue growth is just 6.43%. Our swing criteria, it demands a growth rate somewhere between 20 to 30% to really fuel a sustained move. This kind of weak growth, it's a huge headwind pushing against any strong bullish argument.
And you know, the fundamental weaknesses don't stop there. Insider ownership is super low, which kind of suggests a lack of conviction from the people at the top. The cash-to-debt ratio is subpar. The float size is absolutely massive, which means you need enormous volume to move the price in any meaningful way. And with short interest below 1%, well, there's just no chance of a short squeeze coming in to save the day.
Okay. So given this really mixed intelligence, you've got a compelling technical pattern on one side, but weak fundamentals on the other, we now have to move to our execution phase. A precise tactical plan isn't just recommended here, it's absolutely mandatory. We're going to define the key price zones for this entire operation.
This is the number. This is the line in the sand. $169.21. That's the 52-week low. If we see a definitive break below this level, the entire bullish idea is invalidated. Period. All eyes have to be on this number as the absolute floor. Now, this is our primary area of interest, the price range between 175 and 185. That's the battleground. It's where this triple bottom pattern has been forming. We absolutely need to see buyers step in and successfully defend this zone to confirm the base is real. And here's the potential reward if, and it's a big if, the thesis plays out. The average analyst consensus target is sitting way up at $287.14. So from our tactical base, that represents a pretty significant potential upside.
So this slide lays out the precise engagement protocol. Step 1, you monitor the price action as it gets near that critical support zone. Step 2, you wait. You await confirmation that the triple bottom base is actually holding. Step 3, you assess for a positive price recovery before you even think about entering. Let me be crystal clear. This is a watch list item, not an immediate go signal.
All right, this brings us to our final phase, the session close. Here, we're going to summarize everything we found, take a hard look at the external risks, and deliver the final verdict on this potential trade. Because beyond the chart, we have to consider the environment, right? This trade faces some major external risks. We've got concerns over iPhone 16 demand, the weird staggered rollout of Apple Intelligence, and of course, the ongoing regulatory pressure from the EU. Plus, how the market reacts to the new AI features in October, that's going to be a huge tell.
So, let's summarize the briefing. The strategic edge? It's a potential triple bottom, but it's totally conditional on that support level holding. The key risks? Weak fundamentals, and those big external headwinds. So the final verdict is this. It's a conditional long play. This demands patience. You watch the levels, and you do not engage unless that tactical protocol is met.
And that leaves us with one final thought to chew on. We know all the current risks, but the market is always looking ahead. With Apple Intelligence set for a wider rollout, is it possible the market is underestimating the power of Apple's next major catalyst? That's the question to keep in the back of your mind. Briefing complete.
Swing Edge Pro, the intelligence feed for decisive traders.